2017 may well be remembered as the year in which the foundation for Indian Realty 2.0 was laid. And by Indian Realty 2.0, I mean a sector in which the consumers have more bargaining power than the suppliers, namely the developer and brokers. But I'll speak about the future in a while. First, let me go back to the first question on a slice and dice of 2017. So evidently, the output metrics of 2017 are not pretty. The launches of new homes fell by about 40 to 50% in the April to December period of 2017 as compared to that in 2016. Sales themselves fell by 10 to 20% in H2 of 2017 as compared to the year before. Launches had fallen because the developers started focusing on getting their ongoing projects approved through the RERA. While sales fell because of different reason, GST of 12% had been slapped on the under construction projects, which led to an increase in the end prices in an already troubled market. So between these two metrics, the outputs did not look so good, as I mentioned. There are a few trends, however, which we observed. One was that the top 20 developers started increasing their market share quarter on quarter. And this is sort of a good trend because smaller fly-by-night operators are ceding share to the larger organized and hopefully consumer-friendly developers. Another trend we saw was on the geographical mix, where Mumbai and Pune started contributing 45 to 48% of the supply and the demand of all India. This was largely because RERA got stabilized in Maharashtra quicker than in the other states. A final point was on demonetization, the big sort of the sky is falling down sort of fear which started off the year with, and that was quickly nailed in the first quarter itself when Jan to March sales sort of went back to the pre-demo levels. So the whole canard about the 30% fall in prices and demand sort of going away from the sector did not prove true. So that's all a quick summary of 2017. Moving to 2018 and beyond, as I mentioned earlier, the Indian Realty 2.0 might be what we are going to see in the next few years, and there will be more transparency, there will be WYSIWYG, what you see is what you get, and consumers will start getting more and more confident with the protective clauses of RERA. As they start doing that, the fence sitters will start coming back into the market. Renters who had been postponing their buying decisions for 2 to 3 years will start entering the market. Sales will start increasing, and encouraged by that, the developers will start supplying better and smarter homes. So that's a virtuous cycle which I see over the next 2-3 years. Sales will remain subdued for the first 2 quarters because of the lower supply of 2017, but I hope that by Q4 of 2018, the sales will start reaching the 2016 level, and that's the metric which one needs to really observe to sort of see the inflection point of the industry. If that happens, then 2019 will be the year of full benefit of all these factors that have played out in the last couple of years. Prices will start correcting secularly in 2018 and quicker in 2019-20. And the last element, which is the private equity companies and the FIIs, will start coming in after the investors come in once they see prices moving out. So that's a virtuous cycle which I see playing out over the next 3-4 years, and hopefully we are going to see a positive sort of period for the Indian real estate sector in the years to come. Thanks.